Imagine not passing down the struggle to your kids so they can automatically get ahead in life. Let me tell you a few things you might have not already known about that can help set your kids up for success so that you do not pass down the struggle. I will preface this by saying you should not set this up and contribute all your money to it if you don't even have your financial stuff together. You need to get on your feet first. You need to set yourself up for success first, and then you start contributing to your kids' success. Number one is a 529 account, which is basically a savings for college or educational expenses for your child. The account is in your name and you get to specify where and when the funds are used, but any money that you put aside into this account has to be used for educational expenses. It doesn't have to necessarily be college, but it has to be things related to education like books, technology, etc. An advantage to this account is that it grows tax-free as long as you follow the guidelines. You have to use it on educational expenses. This is like any other investment account where you put money into the account and then you invest it into different stocks. Google 529 account for your state so you can look up the different guidelines and the different restrictions on these accounts, and also you can talk to a tax professional who will be able to give you all of the rules about this type of account and how to set it up. The second account I'm going to talk about is a UGMA or a UTMA. This stands for Uniform Gift to Minors Act or Uniform Transfer to Minors Act. Unlike the 529 account, these type of accounts can be used for anything, but these accounts belong to the minor once you set them up, and the money that you put in there is irrevocable, meaning it's a gift that you're giving to the minor, and once it's in that account, it belongs to them. You cannot take it back. There will also be different tax responsibilities on these accounts. Up to a certain amount is tax-free, but if you make a certain amount of gains, it will be taxed, so just keep that in mind. I personally set all of my kids up with UGMAs, and we contribute money to those every month because I didn't want my kids to have to be locked into only getting the money if they go to college, because maybe they don't want to go to college. Again, Google UGMA or UTMA for your state and read the different guidelines and the different benefits. Also talk to a tax person to see how the tax on the gains will impact you, and do your own research for sure. You can also just put money to the side in your own brokerage or investment account for your kids. The benefit to that would be that there's no restrictions on what you can use the money for, and you entirely control it. So you control when it is given to the child. Unlike the UGMA and UTMA, at a certain age, they are technically legally given responsibility for that account. So you will have to do your own research and see what works best for your situation. The last one I'm going to talk about is a custodial Roth IRA. This is the same type of deal as like a Roth IRA, so it is a retirement account. The child must have earned income for you to set this up and for them to contribute. It does not have to be an actual job. It can be things like babysitting, etc., as long as they file taxes and pay taxes on that income. These are tax advantaged accounts, so when your child goes to withdraw money for retirement, they're not going to have to pay tax on that, and they can contribute $6,500 a year or their total income amount, whichever is less. And in 2024, this might be changing to $7,000. Once your child turns 18, it will be converted into a regular Roth IRA, and they will keep contributing to it. This is really good for people who are owning their own business because their child can do work for them. You do have to file taxes for your child, but then you can contribute income to their Roth IRA. And imagine if your retirement account at work would have been being contributed to since you were like 10 years old. Imagine the benefit of that and how much money you would have in your investment account. So I hope this helps. There are definitely nuances and different benefits to these types of accounts, and there are also differences based on where you live. So definitely do your own research on these accounts. Talk to a tax professional and they can help you understand which one might be best for you, and set your kid up for success. I wish all of our parents would have done this for us, and we would probably be way better off right now. Let's build generational wealth, not pass down the struggle. You got this.